In today's webinar from Talking Hedge Events, I'd like to turn things over to Meg Bodie, the president and founder of Talking Hedge Events. Meg, it's all yours.
Wonderful. Thank you, Ken, and hi, everybody. We have a terrific audience lined up today for an expert panel. This discussion is about a very key topic in alternative investing, looking at customization of data in private markets. Investments in the private markets is on the rise, and State Street did a survey recently of both managers and institutional investors and found that everyone intends to invest more and increase their allocations to private markets. Excuse me. And as many of you know, the data there can be often unstructured and highly complex. So very challenging to get a snapshot of where you are, and they want to talk to you today about how you can customize your data to get what you need to give to your investors if you're a manager, or how the investors can get it from their managers. So anyway, we should get into that. Welcome to everyone. This is the fourth webinar in our series of 5 for our Santa Monica series. We've got one more that will be next Friday. I realize we're getting close to the holidays, but we're going to take you out just one more week. I just want to say that the speakers today, as I always remind you, are really speaking from their own experience, and any of their insights and the opinions that they voice today in the webinar are their own and not necessarily those of the firms for which they work. I also want to thank our sponsor firms, starting with State Street on this one in particular. Thank you so much. Inicap Investment Management, also Efficient Capital Management, Bodie Research Group, Graham Capital Management, Martlet Asset Management, O'Brien Investment Group, Vidrio Financial, and Welton Investment Partners. Very grateful that you made this series possible this fall. And I also want to thank AMA, Casa, and Kaya, who are our association partners and help us get the word out. Just delighted to partner with them. So let's get into it. Marianne, why don't you come on? Jen, Mark, Tom, here's our panel coming on board. Wonderful. And I'm going to disappear. You guys have a fabulous conversation. I'll see you later to close up. Thank you.
Thanks, Meg. Hi, everyone. Good morning. My name is Marianne Orr, and I'm the Private Markets Product Manager at State Street. With me today are Mark Philstrip, Head of Platform and Alternatives Architecture at AllianceBernstein, Jen Trybush, Head of Alternatives Product at State Street, and Tom Vode, Customer Success at Mercatus. Welcome, Jen, Tom, Mark. I'm looking forward to working with you today and talking about data customization in private markets. So we're excited to chat with you today about the customization of data in private markets. Private markets are shifting as investors are pouring money into the asset class as the hunt for alpha intensifies. In private markets, which we define as real estate, infrastructure, private equity, and private debt, are becoming commoditized through the retail channels. So with this revolution, the need to more effectively and efficiently manage, analyze, and report on both structured and unstructured data is necessary, as improvements in data could drive alpha, but asset owners are also demanding better transparency in reporting. So as Meg mentioned a few minutes ago, State Street recently completed a survey of 170 private market asset managers and asset owners, and we asked these investors about why they invest in this asset class, where they see the private markets heading in the next 3 to 5 years, and where they struggle in terms of data management and ESG reporting. So we'll talk a little bit about the survey results during our chat today, and we'll also, at the end, Ken will provide a link if you're interested in downloading the white paper that was just published recently. So today, again, we're going to discuss how a comprehensive data strategy, so one that spans front to back office and public to private markets, can help investors successfully navigate this market. As we heard from the survey, that data quality and standardization is a key barrier to increasing private market allocations. And we'll also look at the poll results in a few minutes as well to see, it'll be interesting to see where you polled versus some of the survey results. So let's get started. Jen, I'm going to start with you. Asset owners and asset managers we surveyed expect to increase investments in private assets in the next few years. What does this mean for multi-asset managers in terms of managing their data from both public and private markets?
Thanks, Marianne. Thanks for the question. Thanks for having us today. What I think that the survey confirms for us and what we're hearing from asset managers and our clients is that as the need for private markets exposure into their portfolios, we see it not only across existing private markets managers today that may invest in one segment of private markets, who are also expanding into the other subsegments that you mentioned in private markets. We're also seeing traditional managers look to acquire that skill set, and there's different ways that they're going about that. But it's clear, like, the data comes from multiple forms, whether it's their valuation, ESG, risk exposures, their fund accounting data, their cash availability, liquidity, that data needs to be liberated. And so it is, become a gating item in certain cases for people to gain access to the asset class. It definitely validates for us that there was a business imperative to help drive some technology and solution towards standardizing that.
Thanks, Jen. And as you can see on the screen now, one of the results of the survey is that half of the asset owners do plan to increase their allocations to private markets, with real estate just over a third. So that's interesting that more and more real estate investments are becoming interesting to the owners and managers of the firm. So as we wanted to continue on, I think, Tom, I wanted to talk to you a little bit about some of the deeper requirements in data management for private markets. So some of the data that we saw, we asked investors how they currently manage data, and 69% said that their data is siloed in spreadsheets or point solutions. So this data for valuation and performance, risk exposures, fund accounting, et cetera, as Jen mentioned, is all housed in a different place. So Tom, what does it mean on a practical level for an asset manager trying to scale in the private markets?
Practically, it's a huge challenge. I think that's why we all joked before this about dressing up as an Excel spreadsheet today for the webinar, right? Look, I think the most.
Thank you for not.
Yeah, you're welcome. You're welcome. Yeah. I think Jen touched on this when she was just talking about investors a little bit in the different types of data. I think that's the core issue, right? What we hear more than anything is investors want more information than ever, and it's also more manual than ever for some of the reasons that she described. I mean, Marianne, you just said it, 69% in the survey relies on siloed reports. I think it said not even 20% have interactive online tools between them and investors. And I thought the survey was really interesting for why. When you start to look into it, the reasons that it highlighted in there were costs, a lack of a knowledge of what alternatives actually exist to solve today, and a lack of urgency around the problem. And those all strike me as symptoms of a high growth industry. And that's what private markets is. It's high growth. There's not a lot of time to step back and try to solve this. And if you think about a lot of the folks that took this survey, they're shifting from a public to a private investment. I think it said they're going from about a 25% investment in private to about 35%. That's a pretty mature way of managing data to a fairly immature way of managing data. And so I think the awareness of this is going to be really important. I'm big on examples, and I think, Mark, this one will speak to you a lot, and I know Jen and I talked about this, is just take a fund manager that's just trying to see their NAV and over time and drill into that really quickly. That sounds so simple. That is thousands of raw accounting transactions that are today cobbled across probably 40 spreadsheets that come out of different systems. And somebody has to normalize that just to analyze it. That is identical to what you would have seen 10 years ago from an individual trying to look into their own personal portfolio. They would download information from different bank accounts, credit cards, investment holdings. They would put it together themselves. They would analyze it. Now you have Mint. Now you have personal capital. You have things like that. And I think what the industry and private markets needs is more of an awareness that there are things that can solve for this today, and also the value of that problem to help drive some of the urgency.
Thanks, Tom. I agree. We are in what we're calling the revolution of private markets. So let's dig a little bit deeper on the requirements in data management for private markets. So Mark, your firm, AllianceBernstein, manages over $700 billion in assets with a significant allocation to multi-asset and alternatives. How has your investor data requirements changed over the past few years, specifically as it relates to your private markets funds?
Thanks, Marianne. We've seen a lot of change over the last couple of years in our private alts area, especially. As Tom alluded, I think from an investor standpoint, there's this awareness or desire to have things up to date, real time. Be able to pull up your iPhone and see all sorts of information from a few seconds ago. And you try to layer that desire, that expectation that everything is real time and instantly available to a very complex world behind it, where many of the alternative investments don't have real time data available, right? So if you're buying a listed equity or a mutual fund, there are markets and exchanges where there's tick data that you can get any moment of the day, and end of the day snapshots. If you're trying to see what your portfolio investing in infrastructure or real estate, you can't just say, oh, the latest value of this skyscraper in Midtown is worth X. It's not quoted like that. So there behind that there are many valuations that occur that complex models that happen on a periodic basis. And what we're trying to do is find ways to marry the scrutiny and the detailed effort that needs to go into pulling together those sorts of valuations and folding that into a system where and user experience where clients can see something in real time in their private assets along with their public assets all in one cohesive experience.
Thanks, Mark. Maybe Ken, at this point, we could pull up the poll and take a look at some of the questions and answers that our panelists have shown. So for the first one, how do you identify yourself? It looks like most of our panelists, 33% or a third, are investors. Probably coming in a close second are fund managers and solution providers. So we have, I think, a full mix of asset owners, asset managers, and solution providers here on the call, which is great. The next question about currently investing in any of the following private markets. It looks like it's straight across private equity, private debt, and real estate. Infrastructure coming in about half, but at the same time, gaining. And then we do have some here on the call who are currently not investing in any of the current private market what we call subsegments. So I think that's interesting as well. And then on the third question, is your investment data currently siloed or on separate spreadsheets? And almost half say yes. And then some is a mixture of siloed and consolidated is 11%. And then we have the no's at 22%. So we're still, as we've just been talking about, seeing that investment data is siloed or there's a mixture. And, we are in the revolution now to try to move that forward and become better able to manage the data within the different subsegments. Number 4, if you're an asset owner, do you request customized data from your managers? Yes, 11%, no, 22%. Working towards customization is 22%. And then we did have a large not applicable of 44%. So I think this is a little low. I don't know if any, Mark, Tom, or Jen, if you had any thoughts on this one, but I would have thought that we would have seen a higher customized request, but I think it's good that it's lower than we would have expected. Any thoughts on that?
I would just say, Marianne, that it's encouraging. I think that it is not as high as we would have expected and kind of what's in our survey results. But I also think, given the sophistication of the people on this call, they're probably more comfortable with the asset class. I think we tend to see, at least from the perspective of a traditional manager coming into the asset class, they have a much lower threshold. They want to replicate the equity market, and as Mark alluded to before, you can't really do that. You're kind of comparing apples and oranges. So maybe that's part of the reason for the dispersion from our survey results.
Yeah.
Tom, were you gonna?
Any other thoughts?
Yeah, I thought that was really interesting too. I think there's an element in there of what is customization as well, and I'll just give a quick example. There's actually a mutual client of ours that we were. This is it's about 6 months back. They asked and they requested about 40 different reports to be automated with us, and we said, okay, those are all customized. And they said, really? These seem like they're fairly standard. And we said, no, I mean, here's some examples of what others might leverage that is very similar. And the more we went through it, they said, give me the 80-20. What gets us the maximum amount of value with the least amount of effort of customization. And when we showed them what that template looks like, there was always an anomaly or an issue that would come up because of a specific type of asset class that they were in that would change what one of those reports looked like. And so I think there's actually usually a thought of we're not really customized, but once you start to get into what you actually want and need for, as Mark mentioned, that skyscraper in the middle of Manhattan, right? It just becomes customized over time and people don't really recognize it.
Thanks, Tom. So the last poll result is talking about achieving data-driven operational alpha. And it's currently in place. To Jen's point, there's a lot of participants on this call who have been investing in the private markets for quite some time and have good processes in place. There's some with currently development, and then there's aspirational. So that's kind of a segue into probably our next topic, which, we've spent the last few minutes of this call talking about challenges. So let's talk about solutions. And why don't we start with operational alpha? So Mark, as an asset manager, how do you see data assisting you with the ability to drive operational alpha?
So a number of ways. One is risk reduction, and two would be efficiency. And I think those two go hand in hand most often of the time. As we go through our own platform here at AB, we're continuing to grow, which is of course a good thing. But with that come more volume and more nuances of varying products and funds, and more need and desire to have that all happen faster, right? So we kind of have these two conflicting ideas of greater complexity, greater volume, and less time to do it. So having data and having technology at hand and control is the way that we can achieve the operational alpha. We are constantly looking at different processes that we have and evaluating what can we do, what are the pain points, and what can we do to remove those. So something as simple as uploading documents or capital account statements from an administrator to a website so that our end clients might see it on a secure portal. Several years ago, that might have been a very manual thing where someone would have downloaded the documents, saved them on a share file, reviewed them, and then moved them to another system and uploaded it, and then triggered email alerts. Many different steps along the way, all necessary to make sure that we're maintaining good controls and validation. But if you look at that end-to-end process, that could take hours and hours to accomplish. And if you're just doing that for one fund, that's hard enough. But if you're trying to grow the platform and expanding to many funds, that all of a sudden becomes a burden. So looking at that process and seeing what can we do to automate through good data tools, standard naming conventions, standard interfaces with our partners, standard exchanges, both I would say with external partners as well as internal partners, because there's a lot of information that's moving across systems within our own enterprise, and then seeing what can we do to automate. And we've seen processes like that where it took hours and hours and reduced them to minutes. So for each time we do that, we have a minor celebratory victory, and then we look at the next process, which is now also taking a lot of time. So it's a very iterative process where we can go, from event and cycle to the next one and see what can we do to improve it. Another example I would give would be around just client onboarding, where 10 years ago we were looking at subscription documents for clients coming into these funds, and that process still exists, right? There's a high bar for either accredited investors or qualified purchasers that need to assert and represent that they meet the sophisticated investor criteria to go into such an investment. So there's always a fair amount of legal preparation, both in our offering memorandums that describe an investment, as well as the risks that we disclose to make sure everyone is fully informed as they come in. Upon receiving those materials, a client would years ago would have actually received a FedEx from their advisor with all of these printed out, and then in the back of it would be a 30-page booklet of the subscription document, which they could then leap through with the sign here stickers and FedEx that back to someone who would then manually type that in. We now have things like DocuSign and other digitization in the mix, where this all can happen online in a secure method, with materials being transferred back and forth, which is great in that it can reduce the back and forth and the time to get something done, right? And you're not waiting for something to be delivered, over the course of an overnight or a courier, but you can have that real-time collaboration. So the more that we look through the channel and the different experiences, we find different areas where we digitize and then try to normalize so that we have a consistent process across all of our funds and the whole platform.
Mark,
sorry, Tom, go ahead.
Yeah, thanks, Marianne. A couple of things that you were mentioning really struck me, because so much of the beginning portion of what you were saying was around the time. When I was thinking about deriving alpha, it's usually, it's a function of time, cost, or risk, right? You can probably change one of those dynamics. The time element is obviously apparent, right? The time you can save and just people and the cost of that. But what about how do you all, when you're thinking about those investments, how have you all thought about the risk side of it and maybe the time and what it gives you back? So for example, not having to spend as much time to get everything together so that you can make a decision, maybe makes you make it faster and buy that skyscraper on time, right? Get your bid in first. Or the risk, what's the risk of using the wrong information with an investor? Do you all think about things in those dynamics?
Yeah, I think we're constantly thinking about risks, right? That we that's part and parcel to the financial service industry, I would say. You want to, if you're making an investment, your investment thesis is only as good as the information upon which you base that. So the more rigorous controls we have around data intake and evaluation, the better, right? I think AB traditionally comes from a very rigorous research DNA, and I think that that persists very much still today, where even though we're in new markets and spaces that we might not have been when the firm was founded 50 years ago, that need to have a lot of in-depth understanding of whatever it is we're going to invest in or think about investing in, still very important. An example would be, and this is from the portfolio manager standpoint, where they might have an investment thesis based on some data that has come available, and that opportunity might exist for a window in time. So traditionally, we might have an onboarding where if you say, oh, I go talk to the technology group and say, oh, I want you to take this data and normalize it and put it in a production system and test it before you get there, to make sure that it's all working correctly. That could be several months to get that right. But if you go through that whole opportunity, that whole life cycle, so perhaps some of the investment thesis might have dissipated by the time that you're ready to use it. So there's a need now to, I'd say more than ever, to be able to experiment, I would say, or use rapid prototype is a better way of putting it, where we take data and put it in a controlled way, validate the thesis, and then if it turns out that it will be actionable, then we continue to go through the robust life cycle of all those controls and the putting in production. But having a tool set on which portfolio managers are, in some cases, even more technologists. I think we're all still working in the financial services industry, but everyone is required to have more of a technological hat on and be able to be more facile and nimble with the underlying data itself. So that's a trend that we've seen.
Yeah, I think too that exists with the asset owners too, just given the increase that we've seen with the co-investment opportunities for our asset owner clients. So I don't think that, the process you described, Mark, is unique to asset managers. I think a lot of our asset owners, participants who are on this call, kind of go through that same process in terms of, especially for them, because it's pretty opportunistic to look at those co-investment structures. So having that same kind of rigor and kind of technologist viewpoint into where their opportunities exist is not abating.
Thanks, Jen. I was just thinking when Mark was talking about collecting all those subdocs in a manual way. I mean, it's December 3rd, 10 years ago when I was running an investor services team at a fund administration shop for alternatives. The amount of mail we used to get at this time to try to tie out all of those subdocs, and then the ones that on those sticky notes you were missing one initial and you knew you needed to overnight it back to get that one initial to get those investors into the fund. It's amazing how far we have come. I know we have a long way to go with the continuous improvement and things you guys are talking about, but even just the eliminating the amount of paper that we had even 10 years ago is quite amazing at this point as well, especially on the hedge fund side.
Yeah, as we eliminate the reams of paper, we're exponentially increasing the terabytes of data. So
exactly. And we're changing from checking that somebody signed something to trying to analyze where all that data is coming from and is it truly correct. To your point about becoming more of a technologist versus a checker. So that was great. Thanks. So, we talked a lot about operational alpha, but another aspect of a driver of alpha is the ability to quickly create hypotheticals and what if scenarios. Mark talked a little bit about this as investors are reviewing deals. So Jen or Tom, would you like to talk about some of the ways that quicker, more efficient data helps drive alpha?
Sure, Marion, I can start, and Tom,
Sure.
feel free to jump in. But I think what we've seen, and particularly in the investments that we've made in the launch of our Alpha for Private Markets platform, the need for that has really been persona driven, right? And I think even as we were doing some of our due diligence, some of the COOs at some of the shops that we spoke to, they were actually pulling for us because they said it's very difficult for us today. We have these point solutions for one subsegment of private markets that doesn't necessarily translate as we expand into the other. So I think having that agility to look across not only the subsegments of private markets, but also across what does the investor relations team need to see that is unique to the asset class versus what is monolithic across their private markets exposure is really important. Tom, I don't know if you want to disagree or add to my comments there.
I definitely don't want to disagree because it's completely true. It's the number one thing I hear in any client meeting is all about scenario analysis. And I think it's really interesting. I mean, that tells you it's a problem. It also tells you that it's a fairly urgent problem that people want to solve. I think the interesting part of it is usually most companies we talk to, their approach to scenario analysis is show me the technology. It's a two-part problem. It's a technology and it's a process. You cannot do effective scenario analysis on a portfolio without first having strong data management. And in that, your data management is going to be a technology. You're going to have something in place for that, but you're also going to have a strong process around it. And so I think exactly what you were just talking about, Jen, I would just re-stress that it's probably the number one thing that we see, and it's pretty pervasive.
Yeah, and I don't think regulation for ESG is going to come over the top anytime soon to kind of standardize it in a way that we think about. I think we're going to have to self-govern as an industry to kind of come up with, what are table stakes versus what is unique to the portfolio.
Yeah, and I was just looking for this stat, and I just found it because it wasn't in the survey that you just provided, but it was in the larger survey that we were talking about. Almost 85% of the asset owners reported it would take longer than a week to run a scenario analysis across their portfolio. I mean, that's straight out of the survey, right? So that's a nice quantification of the challenge right there, how much time and effort that takes. Mark, it speaks to what you were talking about earlier on something even smaller earlier in the process, right?
Absolutely.
So I don't see any questions yet in the Q&A. I just wanted to remind our participants, if you do have a question for our panelists, to type it into the Q&A, and we're happy to chat about anything that's on your mind. But as we're waiting, we did talk about challenges, solutions, how we're driving alpha. So maybe, I know this chat was to talk about customization of data. So maybe Jen, I'll ask you, how should asset managers and asset owners think about public and private data management?
Yeah, so I think a lot of it is making sure you're understanding what is that for, right? So what Mark mentioned earlier, what you need for dynamic trading strategy in a hedge fund in a public market view, how is that relevant and appropriate from a risk and exposure perspective in your private markets? Now, you could make the case potentially in a private credit portfolio. Maybe they're similar, but from a valuation perspective for real assets and infrastructure, I don't know that you need to have real-time ticking for that. Now, there's definitely strides that the industry is making in terms of, and I'm excited to bring technology to bear in in those asset classes, because I think what we'll be able to do from a liquidity perspective will be really interesting over time. We're not there yet. Yes, we're out of the mailroom. But I do think that you have to look at suitability of like, what is it that you're trying to solve for from that public and private view? Like, yes, I want to see like where my cash is. Absolutely. Yes, I want to see like my trading activity and exposure reporting. But when I look to go evaluate my performance, it'll be nice to do some comparables, but again, like you want to make sure that you're driving and you're solving for something based on suitability, as opposed to just saying we need to have everything all in one place, because those are very different business challenges in my mind.
I agree. So it doesn't look like we do have any other Q&A. So I'll continue on with some of the questions that I have. So Tom, let's talk about the future of private markets. We know that investors are going to continue, or we expect them to continue to allocate more money to private assets. And we talked about better access to quality data and insights. What do you think about the future? If you had a crystal ball, the question, what would you say?
Well, first, I want to think about what does more allocation mean in private markets. I think we said earlier, the first shift is from public to private. It's about 25% of their portfolio to about 35%. That's a pretty sizable shift. And the survey, I think, showed that allocation is going to be to a variety of different asset classes through a variety of different channels. So what that tells me is no standardization, right? If you think about different asset classes, we'll use Mark's skyscraper example versus a wind farm versus a different real estate asset versus owning a retail sales company versus a winery, right? All of these are potential private markets assets that are just different KPIs, and you're not going to standardize that very simply. So I think the point is, with investment and managing that data, we're going to start to see companies think about how they structure their organizations different. And probably the simplest example I have for that is to think about an accounting system. When you put an accounting system in place today, nobody thinks twice about it. It's necessary for keeping the books. With it, you also have an infrastructure around it. You have entire functions that are dedicated to administering that system, to overseeing a close process monthly and quarterly. In other words, to ensure the quality for an audit, right? Within private markets, you have teams that are collecting data from portfolio companies, but there's no controller. There's no function that is dedicated to making sure that data has quality. And it's the same with any ESG process today. And so I think you're going to see investments in technology. You're already starting to see that. But I think you're also going to see teams start to shift their way of thinking about how they resource it in the same way that they resource other things like that.
Yeah, Tom, I would just say, spoiler alert, there is some information in the survey that points to this for our asset manager colleagues on the line here, that asset owners, as part of their due diligence, are now requiring some level of scrutiny on data quality and data management prior to an allocation. So it's not acceptable to rely on, what the control checks are. You've got some real high caliber technologist person like running some Python model in the sideline for the investment team. That is, coming to the forefront more and more.
Thanks, Jen. And thanks, Tom, for sharing your insights on the future of private markets. So before we wrap up, Mark, I just wanted to maybe get your crystal ball future view from an asset manager perspective. What would you like to see for data insights from third parties, such as fund administrators like State Street, to help you with this customization that your investors are looking for?
Sure. So I'm excited about the future. I think as time goes on, the challenges get greater, but the tool set to deal with the challenges gets better too. I know State Street is with Mercatus is embarking on Fund Insights and a number of new tools that will really improve the collaboration and real-time exchange of data information as we move forward. So some of those challenges we've had historically, where in information or portfolio positions are dumped by a fund administrator into an Excel doc and reviewed, and then sent over to the asset manager to review, and this back and forth of Excel documents over email or other private exchange. That tends to will fade over time and move towards real online collaboration, where teams from both companies, the asset manager and the fund administrator, can be logging on to one system and annotating different holdings within a trial balance or a holdings report, and either drilling down and having not only the data itself, what are the positions, but the metadata around that on, yes, I reviewed it, and that signed off on that field or that building or wind farm. That sort of technology and tool will allow both companies to get through more information in less time, and have I think better quality controls, because the sharing is so much more facile than it used to be. So I mean, I think that's the basic trend I see is more and more information, more data, but better tools to slice and dice and drill down and then collaborate and share over time.
Thanks, Mark. Yeah, we're moving from mailrooms to email to online collaboration. So I definitely see it moving, especially from where we sit in fund administration. So I didn't have anything else I wanted to ask you all. I do want to thank you again for sharing your insights. We talked a lot about State Street's recent survey and the customization of data. Ken, we just completed a white paper here at State Street on that survey. So Ken, if you want to flip up the screen, if anyone's interested in seeing that data, the link is available on our State Street website, which we're happy to have you go in and take a look at the data. And we're excited to continue this data management journey as part of.
And Marianne, I just put that link into the chat for everybody.
Great. Thanks, Ken. So we're excited about, completing the survey, writing the white paper, and we appreciate everyone's time joining us today. I don't see any other questions in the Q&A. I don't know, before we close, if Jen, Tom, Mark, anyone had anything to say before I turn it over to Meg.
Let's hope the future doesn't hold any Excel costumes anymore.
Exactly.
Indeed. Yes. Well, I can't believe you ripped through that very fulsome agenda so quickly. I think that was excellent. And I think this is a huge topic, just unbelievably huge. The times clearly are a-changing, as the song goes, and there's going to be a lot of work for all of you going forward. Very good for the industry that assets are moving into private markets. So that's good news for all of our crowd here at Talking Hedge. And I want to thank all of you, Marianne and Jen and Mark and Tom, for joining us this morning and really giving us a glimpse into kind of the future, of the importance of data. We all know that, but things really are changing very quickly. Data science is the thing. I know that. I have daughters who are getting into the job market, and that's all they want to do, because that's really the future, I think, of so many jobs, and the impact is going to be, I think, remarkably positive. So thank you, all of you, for participating today on the panel. Thank you all for tuning in, those of you who did, and we will endeavor to get this video out to you if we can get consent from all the speakers. for those of you who missed it. And I hope you all have a lovely fall weekend. It's still fall, almost winter, but enjoy. And as we head into the holidays, I hope you're all able to be with your loved ones and stay healthy and vigilant, and just enjoy your weekend. Okay? Thank you so very much.
Thanks, Meg.
Thanks, Meg.
Thank you so much.
Thanks.
Bye.
Bye.